Good evening, traders. This is MR Strategies. I am Mike Rabinowitz reaching out to you guys tonight, talking about what took place today during today's trading session. I ran this by you on Sunday night. I hope you guys took advantage of the analysis and much of what I really work on in terms of what I like traders to pay attention to in terms of trading the futures, whether it's the S&Ps, the Nasdaq, or the Dow. And be honest with you, it doesn't make a difference what you trade. I think the moving averages and the price locations, and those being the pivots, the daily pivots, the basic are settlement and the basic support and resistance levels that every market provides in terms of their high-low settlement are areas that are going to come in play no matter what you trade. I just so happen to enjoy trading the futures. It's something I've been trading for years. I have a tremendous feel for these particular markets, but I really believe it'll work well for anything in terms of what you do like to trade. So it's something you can definitely add to your worksheet or your playbook. So let's get a quick look at what took place today. I talked to you guys on Sunday night, and I talked about this market. And once again, I'm going to keep repeating this. It's not about whether or not I keep saying that the market is showing signs of like fatigue, and it's just the market's extended. That's all there's to it. And it's not that it can't sustain these levels. It's hard to find people, and it's hard to find significant buyers up at these levels. So when they keep pushing it to these extremes, they have a tendency to reverse. And this is what, as a trader, you want to take advantage of. This is what extreme trading's about. And this is what I keep pressing and trying to embark upon all you traders to take advantage of. And it plays out consistently. And a lot of what I do is just simple homework, and it's simple high lows. I've talked about this in so many of my videos, is that market just continuously repeats patterns over and over again. And they do so constantly around the moving averages and the main daily pivots that you get throughout the trading session. And we'll take a look at today's trade. I said from the get go that you wanted to pay very close attention to where we would be on the opening. And, it was a pretty interesting morning, but I think what was most important about it is that it did play out exactly how I would expected it to. It it struggled at the extremes, and I believe. Let me roll into the 15-minute chart because I think that's going to give you a better read on what happened today. It was. Let's take a look at it. So here's today overnight they jammed them all morning, and I believe let's get where's the bell? This is 8:30. It's right here. So we opened them up around 4408. All right, knowing all along that we had a gap that extended all the way down to 92. I talked about it Sunday night, and I told you that there's going to be a high probability that we are going to fill that gap, and it did. And once again, it starts with the moving averages. And the 15-minute chart MA was sitting around 4408. And you can see it kept gyrating all morning, but it could not extend. And you can see the struggles it had at these moving averages. And these are just your basic daily 15s. Um, and the levels were, I believe, a little higher. So we never got a true hard turn from um, R2, I believe, which was 15. They can only get as high. I mean, look at this. It was a chop fest all morning. I mean, 8:30, they got them up a little shy of it, and you can just see. But do you see how they protected this buy zone right here, which was at R1, even though we still had a 10 handle gap underneath it? But you see how they used this level And these were opportunities to get long. Absolutely. These are reversal long opportunities. It all depends on your objective and your trading and what trades are best suited for you. The scalper is going to take advantage of this. This is a red to blue solid reversal off of institutional buying and a bull trend acceleration. For a scalp or any type of trade in terms of that, it's an excellent trade. It's not a trade that I'm going to be taking early in the morning because my objective is a little different. My game plan is I'm looking for this market to kind of lose energy at these higher levels and roll over. So I'm looking to go the other way. But that's just how I trade, and I'm taking that side of it. I don't like getting too confused in all the movement. I like to be patient and I like to stick to the game plan. But that's my game plan. Doesn't mean it's for everybody. But I think what's more important is what are these levels telling you? This is how you should be looking at your trading session, and how price is reacting to them. And it was a tight range all morning, but we couldn't get through 11, the 0811 area where the moving averages were. I believe I took my short somewhere a little after 9 o'clock. I took this short right here and I basically just parked on it. I stayed away from all of this because I thought that the market might have a shot at pushing higher and getting to R2 for the better reversal short. But once again, the market is extended. It gapped higher. It was 20, 25 handles higher. You're asking a lot for people to jump out of it and push the longs up here, you know. And it's not that the market isn't worthy of the location. It's just a little overbought early in the session. And that's what I try to share with a lot of traders when it comes to gaps, open gaps, lower gaps. I mean, preferably when you're in a bull market, acceleration and you get one of those lower gaps, they're golden opportunities to get long. But of course, it's always about confirmation. So let's just move on. And, this thing played out pretty much like I had talked to you about Sunday night. I couldn't have wrote this script any better. And you can see right here, they made this high, and then the struggle took place. And then right here, you got this double top at about '08, which is, I think, where that MA was sitting at in this morning session. And then that was it. They pulled the plug on it. So I want you to take a look at how this is all looking in terms of tomorrow and whether or not this is going to be a more significant issue. You can see, I mean, this is all a bunch of chopping here. The market is really trying to hold on to these higher highs, you know, and you can see these big sell-offs that we've gotten that has gotten to the 50 MAs and has just held like a rock and come right back up to here. But this is what happens when you get these like you get a lot of traders in here. There's a lot of people trading this. And they're moving it and they're pushing it well beyond their basic locations and fair value. And this is kind of what happens. It gets a little extended. And, the institutions take advantage of that. And it's not that they're not looking to bail out and get short. They're just taking advantages of the extended premium on these locations, and they're going to push them to levels where they might be of more interest to them. But this is where this comes into play now: is where is this going to go now? Where we at? And I think there's a little dark cloud over this market, but that's personally just my opinion. It's all about what can this market prove to us, and you just want to trade within it. So here's the deal for I see tomorrow, and you can see this red MA right here on the daily coming in at about 65, and that is so happens to be S1, and I really think this is going to be a big location. Whether or not, if this market is really showing true fatigue signs and we start challenging these support levels and this MA right in here, you're going to want to pay close attention to it because it's going to change the dynamic of this market, so to speak. The bull trend extreme. We're still in a bull trend, but we could become corrective. And we're coming to the end of the summer, and things start to change a little bit. September, October are notoriously sell-off months. More October, so I'm just bringing this to your attention. I'm not telling you to jump on it and just sell everything in sight. Everything's about proving itself right now, but the MAs are the tell. and you want to pay attention to it. And right here around 65, 66 is going to be significant. You can see here the 15, your resistance. You can't put too much into the overnight sessions. Everything changes quickly. I think this resistance level is probably a little more significant. This is up all the way up here to right around even money, 4,400. That could be a big location tomorrow. That's R1. So, we're going to just have to see what the market's going to do and whether or not they're going to want to jam it up there and then take money off. I just don't know. But these are just areas that you want to pay attention to. That's what doing your homework's all about. And then, you could just pay attention to so many retracement levels. Like right in here, you got this retracement level down in here, uh, right around the 4370 area. Okay. And that's been holding, I think, on many occasions. In fact, let's scroll down. And this is really what I like to do a lot. Spend a lot of time looking at old bottoms, old tops. Trust me, here, another 70 bottoms. So that's a big number. And that's sitting above this moving averages because they keep protecting it. And that's protecting the upside and the bull trend. So, that would be a crack if we could hold that level. But, it means nothing until they say otherwise. So, you respect that area. If you get any hard sell off early, and I would be looking for the reversal buy down here if in fact we got that early, but it's got to prove itself. You just never know in the market. I mean, take a good look at his 15. I mean, there's nothing underneath here, all the way down to about 4,300. All right, so I mean, they could take chunks out, and that's the dynamic about these sell-offs is they come so hard and so vicious that they just go straight down to these locations, and that's why I present them to you, and that's why I think you should always keep it in, write it down, put it down, always have these numbers somewhere on the side so you are prepared for the breakout when the market breaks out of its normal range. And we have been in a fairly tight range between 4420 and 4370. So, pay attention to what we do at those extremes. That's what extreme trading is all about. And that's how you take advantage of it. Let's take a quick look at everybody else. And you can see that everybody's rolling over. Oil is now pushing, actually, this I believe is the 50. Yeah, that's the 50. So, I don't know if oil is going to be the guide, but they all move together, so to speak. So there's and you can see right here that the Dow, and I mentioned this to you guys Sunday night about paying attention to that 700 level. That's where this MA is coming into play. You're going to want to watch these areas, and the Nasdaq, of course, as well. I ran this resistance line. I would look for any stall at 15,030 as a stall and a possible reversal back down. Or if they break through it, then maybe something else is in mind, and they're going to continue to hold these things up. But this is how you do a little extra homework on your charts to give you an idea of levels that could come into play for you, no matter what market you trade. And it's always good to have in the back of your mind, okay? And probably the bigger number is underneath it. 14, is it 14.9? Yeah, it's probably rough. A little under 14.880, I would say. Or maybe 14.8. Yeah, 14.880. I'd watch it in NASDAQ if you're a NASDAQ trader. Like I said, if this thing is rolling over, they're going to struggle at these particular MAs. You're going to know right away and pay attention to are the institutions going to come in and hold them up here again like they have on many occasions. In fact, this trend line right here we could probably extend, and this is coming in just below that MA. So the writing's on the wall for all these markets. So we're just gonna have to pay attention. I mean, it could be nothing, it could be something, but this is what all about trading is about preparing and doing a little extra homework and putting yourself in position to be successful trading it. You can do all the homework you want, but if you don't execute and take advantage of your homework, what good is it? So, this is what I'm here to preach, and this is what I'm here to share with you guys that it works. And put the effort in and be patient enough to wait for the opportunities. You can see all the movement here, and every trader is going to play it his own way. They all have a method of trading, and I respect that. I respect how they do it, as long as they're making money and they're consistent. And who am I to say otherwise? My approach towards trading is about patience, trade the locations, and understanding momentum and what it's telling you at these locations and how to take advantage of it from a trading standpoint. Like for example, this double top right here that occurred in the afternoon right at the pivot and rolled over and provided a short. And you could just see the effect that price has and how the institutions are playing these locations as well. That's what makes it even more encouraging and supportive as a trader, is to have that little inside knowledge what the institutions are doing as well. And that's why I incorporate this so much into my trading, and it's something I really think you guys or gals should be thinking about when you trade these markets. So, this is today's activity and or your preparation for tomorrow. And like I said, if I had to look at this right now, I would have to say, and are we under or over? We're already gapped higher. We're eight handles higher. I mean, listen, there's all the support underneath us, so they're going to continue to try to hold this market up. I think the question becomes, what is price going to do when we start getting to these locations? That's the big indicator and the big key, and that's when you will know exactly. And these are the locations you want to take advantage of, because these are the high probability success trades. And this is why being patient and waiting for these locations will benefit you as a trader. I think it's so much nicer to be trading from these high probability locations and have the support of the institutions and having it going in your favor, especially with confirmation. So let's see how this thing plays out tomorrow. Once again, I'm Mike Rabinowitz. I've been doing this now for about 25 years. I was in the pit for a long time, been off the floor for a really long time, and you see a whole different side of the game, and it's nice because it shows that there's so many opportunities to be successful trading. It doesn't have to be futures. I just so happen to have spent a lot of my career in this market, so I have a really strong feel for price and it's just his historical movement. I just spent a lot of time looking over charts and pay attention to all of these. A lot of people don't, they see all this little gyration, and sometimes when you break it down a little bit more, there's so much information within all of these trading sessions and all these little locations where the market stops, stalls, reverses, and when you put it all together, you start to get a little bit of a picture of everything and how to trade and how to trade with the bigs, and be successful doing so. But don't take my word for it. You know, Put the homework in, and if you really want to take it, then see a little bit more. I am going live in about 2 or 3 weeks, and I'm going to, put the proof in what I say into action. I've been doing this for a long time. I've been a moderator in the Quick Pop Trading Room for years doing this. I have a fairly good track record, and you got questions to ask me, please feel free to do so. I'm just not saying things to say them. This works. This approach to trading is very successful, and you don't need a lot of money to open up an account to do so. If you're patient and you're consistent with the locations, you're going to make money consistently, and that's really what it's all about. You don't have to trade every movement. You can be patient and wait for your spots, take your one or two trades, and call it a day. I like to stay with it most of the day because sometimes you get some really interesting movement. Like today, we basically chopped around because the market was sitting. It was gapped higher, and it held on to right here. It held on to this location right here, which was uh, 4402, which I think was a level at the time. I think it was R1. All right, knowing we still had that 10 handle gap down to 92, somewhere in this ballpark. Go down here, we ended up jumping on it a little bit more. But this is what happens. But this is what you pay attention to, because this is telling you something here. You see this moving average that's running through all this. Look how price continues to top off. There's more things about this platform that I could probably share. Just another long time. I would have to put the time in. If you wanted to know more, I can share that with you if you reach out to me, if this is something that interests you, because there's a lot of work I put into these charts when I got involved with this company. And we did a lot of research in terms of modifying these charts and getting a better read on price and momentum. As you can see, what this big red ribbon is saying, that the overlying momentum was negative, and you can see price could not get even near it because it was struggling to even get through the MA. And this was telling you that the pressure was to the downside, despite the fact that we were 20 handles higher. And most people wouldn't relate to that. They would just see the gap higher and the bullishness of it. But an intraday trade is telling you otherwise. It might be higher and the market's higher, but it's showing a lot of signs of weakness. And inevitably, it did exactly what I expected. It came down and it filled the gap down to the daily pivot, and it still couldn't even take off from there. It was just a down session, inside down session. And that's what happens when the market gets extended. It's just they can't get anybody to back it up to the upside. I mean, the market has been just priced to perfection, and I think there's some lingering issues going on in the world. But that's just my opinion. So, don't get too caught up in it. Don't ever take too many opinions as a trader. Trade the facts, trade what the market's telling you. Don't ever get ahead of yourself. Trust me. You know what? You're never bigger than the market. So, this is the 2nd of July, rolling into tomorrow's session. And, I hope you like what you guys are seeing. Reach out to me at mlbino@aol.com. And, I'd be glad to, talk about this in further detail if this is something you really like and you enjoy this particular approach towards trading. Trust me, it works, and you can consistently make money doing so. So, have a great night, and I'll check in with you guys, if not tomorrow morning, sometime during the session. Take care, everybody.